Chapter 7, Long-Term Assets. We're starting Part C in this section, Asset Disposition, Sale, Retirement, or Exchange. Learning Objective 6, Account for the disposal of long-term assets. In this section, we'll discuss what to do when we no longer use an asset. This illustration shows that there are 3 different ways an asset can be disposed of. A sale is the most common method to dispose of an asset. When a long-term asset is no longer useful, we can retire an asset. So it is no longer useful to us, but we cannot sell it. The third method, an exchange, occurs when 2 companies trade assets. In an exchange, we often use cash to make up for any difference in fair value between the assets. So for our examples, we're going to use the following information. Original cost of the truck was $40,000. Estimated residual value is $5,000 with a service life of 5 years, and we're going to be taking straight line depreciation of $7,000. So we'll look at each of the 4 examples below. What if the truck is sold after 3 years for $22,000? What if the truck is sold after 3 years for $17,000? What if the truck is retired after 3 years? And what if the truck is exchanged for a new truck worth $45,000 and a $22,000 cash payment? In the first example, selling the truck after 3 years for $22,000, assuming depreciation for $7,000 a year. Well, the first thing we know we're going to do is sell the vehicle. So for our journal entry, we can record cash of $22,000 for a debit. We know that we're going to be receiving cash, and cash is increasing. So since an asset is increasing, we need to debit cash. Next, we need to take the truck off of our books. We no longer own the truck, so we need to remove the truck and its related accumulated depreciation off of our books. The cost of the truck was $40,000. So the truck is on the book in the equipment account with a debit of $40,000. So to reduce the equipment to 0, we need to credit equipment for $40,000. We also need to take the accumulated depreciation off that is related to the truck. Accumulated depreciation is $21,000. $3,000 a year, 3 years times $7,000 gives us $21,000. Accumulated depreciation has a normal balance of a credit, so in order to get it to 0, we need to debit accumulated depreciation. Is our journal entry in balance right now? We have debits totaling $43,000 and credits only totaling $40,000. So our journal entry is not in balance. We have one more thing to record, a gain of $3,000. A gain occurs when we sell an asset for more than its book value. In this case, cash received is greater than the book value of the asset sold. Gains, like revenues, have a credit balance and are reported as an increase to net income. So our gain is $3,000. Our sale amount was $22,000, and our book value at the end of year 3 was $19,000. $22,000 plus $19,000 is $3,000. We have a $3,000 gain. What if we had sold the truck for only $17,000? How would that journal entry look? Well, we know we're getting cash of $17,000, so we have to debit cash for $17,000. The next part is the same. We've got to take the truck off of the books. So we need to credit equipment for $40,000 and debit accumulated depreciation for $21,000. Both of those will reduce those to 0 and get them off of the books. Now, in this example, do our debits equal our credits? No. Our total debits are $38,000. Our total credits are $40,000. So we know we're missing something. We need a debit for a loss of $2,000. A loss occurs when we sell an asset for less than its book value. In this case, the cash received is less than the book value of the asset sold. Losses, like expenses, have a debit balance and are reported as a decrease to net income. So we sold the vehicle for $17,000. However, we had a book value of $19,000. So we have a loss of $2,000. Retirement. Remember, retirement happens when we no longer can use the vehicle, but we cannot sell it for anything. So let's assume that we are retiring the truck due to a wreck where they did not have insurance on the vehicle. So the truck is totaled, we can't sell it for anything, so our sale amount is 0. We have to take the truck and the accumulated depreciation off of the books because we're no longer using them. So we need to debit accumulated depreciation for $21,000, the 3 years times $7,000 a year, and we need to credit the equipment account for $40,000. Do our debits and our credits equal? No. We have a loss of $19,000. We had a book value of $19,000, but we're taking it off of the books. We can no longer use it. We didn't get any cash for it, so we have a $19,000 loss. Be careful not to combine the delivery truck and accumulated depreciation and credit the difference to the equipment account. We have to remove the delivery truck and the accumulated depreciation from the accounting records separately. Lastly, exchange. So let's assume that we have this truck and we want to go in and we want to exchange it for a new truck. Let's assume that this new truck has a value of $45,000. The dealership gives the Little King a trade-in allowance of $23,000 on the exchange, and the remaining $22,000 owed is paid in cash. So the new truck is worth $45,000. We pay $22,000 in cash, so we get a $23,000 trade-in allowance. First thing we want to do is record our new equipment at fair value. Our new equipment's fair value is $45,000. We also know that we paid cash of $22,000. Our cash is going out. Our cash is decreasing. We need to credit cash for $22,000. Next, take the old equipment off of the books. Same thing we've done with the other examples. You've got to credit accumulated depreciation for the 3 years of depreciation taken. Debit accumulated depreciation for the 3 years taken, and credit the old equipment for $40,000. In looking at this journal entry, are we in balance? Do our debits equal our credits? Our debits are $46,000 and our credits are $42,000. So we need a gain of $4,000. When we exchanged that equipment, we exchanged it for a gain of $4,000. You can also look at it as the trade-in allowance, which was $23,000, is $4,000 more than our book value. They gave us $4,000 more towards the vehicle than we had it on the books. So we have a $4,000 gain. In working these examples, please pay attention to which company you are. There's a couple of homework problems that talks about 2 different companies, and one question has you look at it from company A's perspective, and then the next question has you look at it from company B's perspective. So please make sure that you're reading any homework problems very carefully to see how the exchange is occurring and which company you are.